So welcome back, everybody, to an important video. I want to share with you this week an overview of what happened in the market, how my portfolio is impacted. And then lastly, I want to show you the 4 top performers in my portfolio and the 4 worst performers in my portfolio. So I want to go off then and look at the worst performer in my portfolio for the week. Let's take a look at what happened, why investors had it drop so much, and then from a dividend growth investor perspective, is this a buy, a sell, or a hold? So this is going to be a fun video, and it's going to be an analysis that you won't want to miss. So with that, let's get started. Hey guys, welcome back. This week's going to be a fun video. For those of you who may not know me, who may have just stumbled across this channel, I'm Kevin Burgess, and I am a dividend growth investor, and I try to share information that's helpful for dividend growth investors. So today we're going to look at what happened, just an overview, what happened for the week. We're going to look at my portfolio returns, and I like to benchmark my returns against the ETF called SCHD, or with ticker symbol SCHD. It has a very similar goal and a very similar design to my portfolio. I want to make sure that I am at least performing as well, if not better, than SCHD. So we'll take a look at that. Then I want to look at what were the best performers in my portfolio and what were the worst performers. And then we're going to take a deep dive into Air Products, which is ticker symbol APD. You won't want to miss that. There is a lot of information in there, and I think it'll be very helpful if you're considering APD in your portfolio, or if you have it in your portfolio and you're considering what to do with it. It's going to be a very helpful video for you. So if you like this kind of content, subscribe to the channel, ring the bell so you'll get notified every week when I add a video. My plan going forward is to add a video every Saturday and then do a live stream on Monday night, at least for the next month, so that we can see how that works out. So I'm glad you're here. I think it's going to be a fun time. So let's get started. So let's take a look really quick at the S&P 500. You can see that it went up about 1.56% for the week. So it's pretty flat, although there was a bit of volatility throughout. So moving along then into my portfolio, let's take a look at the portfolio return for the week. Not very good. We were down 0.74%. However, when I compare that to the SCHD total return, which was down 1.15%, my portfolio is still performing better than the SCHD total return. So when I look at the 1 month, my portfolio is pretty much break even. SCHD down 1.85%. 3 months, I'm down 3.46%. SCHD down 5.77%. However, looking at year to date, I'm up 7.22%. SCHD down 5.59%. And for the year, for a 12-month period, I'm up 5.03%, whereas SCHD has a 1-year total return of 6.18%. And just to give you an idea of where these numbers come from, I use an app called Morningstar, and I basically load all the transactions from my portfolios into that tool. It calculates for me what my total returns are for my whole stock portfolio, and then I can also use it to determine what SCHD is. So all of these returns are based on that Morningstar app. Okay, without further ado, let's look at my best and worst performers of the week. You can see Parker Hannifin, and I talked about them on the video last week. I'll put a link to that at the end if you want to see that. Parker Hannifin was up 1.97% just on Friday. They were up for the week 4.9%. Microsoft was up about 4.8%. I also invest in an ETF called iShares Semiconductor. It is up 4.1% for the week. Then also CME Group, I did a video on it. It's probably been 4, 5, 6 months ago. But it has performed well this week. It is up 4.07%. So those were my 4 best performers for the week. Now let's take a look at my worst performers. My worst performers are Air Products and Chemicals. That is, my friends, who we're going to talk about today. You won't want to miss that discussion. They are down 9.5% on the week. Then we have Kilroy Realty Corp, which is down 9.5% also on the week. Franklin Resources was down 5.5%. And then Pinnacle West Corporation, which is a utility holding company in Arizona, they were down 4.7% for the week. Now let's get into Air Products and Chemicals. I want to do a bit of due diligence here with you. I want to take their earnings call. I want to try to identify the key points that drove investors away from this stock, talk about my perspective on that, and then determine whether it's a buy, a sell, or a hold. They are a company that produces the gases that are needed in industrial types of applications and even also agricultural. So anywhere there's a gas that's needed, Air Products is there to serve that need. They dropped nearly 13% the day that they released earnings. So you can see here that on November 7th, I bought 20 shares, which is not a lot, but it's really the available cash that I had in the account that I used to buy Air Products. I bought 20 shares at $255.44. It had been trading just one day earlier at $291 or so. So what does Morningstar say about this stock? It says it's trading at a 15% discount as of November 10th. Its fair value, according to Morningstar, is $314. That is based on the analysis they did on November the 7th. They still believe they are worth $314. They did reduce it from $319 to $314, but they still are holding firm in their $314 fair value calculation. Air Products, according to Simply Safe Dividends, has a dividend yield of 2.6%, but it's got a dividend safety score of 95 and has a really good track record for dividend growth. And we're going to look at that more here in a few minutes. So let's look first of all then at their adjusted earnings per share. The adjusted earnings per share was for the quarter up 11% over the prior year. So it came in at $3.15. For fiscal year 23, they were up 12%. So very consistent in the fourth quarter with the way they had performed all year long. Air Products has given us a CAGR adjusted earnings per share increase of 11%. That means that on average, over the last 10 years, Air Products has grown their earnings per share by 11%. That's pretty impressive. That's good long-term growth. So can't really be that. Let's move on then. Dividend history. Let's look at that. So 2014, it was around $3. Now it's around $7. That is a 10% annual increase in dividend payout. I don't think that's what is causing the problem. Okay, so then let's take a look at their outlook. Maybe they've given guidance that is really bad or something. So let's take a look at the outlook. You can see that their quarter one, fiscal year 24, they say they're going to be between 290 and 305. The prior year, that's a 10 to 16% increase over the prior year. When you look at their outlook for fiscal year 24, they're saying $12.80 to $13.10, which is 11% to 14% increase over the prior year. So their outlook doesn't really cause any alarms either. We do see here that they expect capital expenditures in fiscal year 24 to be $5 billion to $5.5 billion. We'll talk about that a little bit more as we move forward. So when I listen to the earnings call, there are really three things that I believe investors are reacting to. Let's take a look at what those were. Number one, overruns and CapEx. They highlighted a project called the Louisiana Blue Hydrogen Project, and they pointed out that the costs for that project are up by $2.5 billion. Now, this was a big deal because the total project started out with a cost of $4.5 billion. So we're talking about a 55% increase in costs. The second thing is that they had some volume weakness. Their volumes were pretty flat. So we'll take a look at that. The third thing is that revenues are down 11% from last year, Q4. So while earnings were good, their revenues are down. So let's talk about all three of these things and let's kind of put this in a nutshell as to whether we should buy, sell, or hold Air Products. So let's take number one. This is the Louisiana project update. You can see the original estimate was $4.5 billion. You can see that the new scope is $7 billion. And what we find out here is that they had an infrastructure expansion. So we need to find out a little bit more about that. But they do still expect the project's IRR, internal rate of return, to be greater than 10%. These are some of the notes from the transcript of Air Products earnings call. And what they said is that they've noticed that there is a increased demand for blue hydrogen and blue ammonia, and that it's improving significantly. So then I highlighted also this part here at the bottom. It is important that we pre-invest in the infrastructure needed for future expansion now, so that when the demand increases rapidly, as we expect it to, we will be able to bring the next phase of this project on stream as fast as possible. So what does that do? That provides them, especially in this blue hydrogen and blue ammonia category, first mover advantage. So they are looking into the future and they're saying that we are noticing a trend in one of the products that we provide, and we need to be able to reach that demand when it ramps up, because we believe that when it ramps up, it's going to ramp up quickly, and we need to be able to do that. So they made this strategic decision to invest more in this particular project. Investors took a look at that project and they said up 55%. That means all of their capital spending is going to be up significantly. And I think that's a bit of a leap. I think it's difficult to take one project and extrapolate that across all of the capital expenditures. One of the things we need to point out here is that Air Products is investing a lot of money in infrastructure. And as many of you know, free cash flow is operating cash flow minus capital expenditures. This means that they're investing a lot of capital. The second issue that I think investors had is that volume was pretty flat. So you can see here that the volume was flat to 2022, same period of 2022. It was up a little bit from Q3, which was last quarter, but overall, year over year, it was flat. The macroeconomic issues with higher interest rates, slowing down of production, all of those things are going to impact Air Products and chemicals. If industries are not producing, they're not using the gases. So it's going to have an impact. And the third thing is that their sales were down. So take a look at this. Their sales were down for the quarter versus last year by 11%. That's a pretty significant drop in revenues. So while earnings were good, revenues were down. Should we be concerned about that? Let's take a look at what made that up. As you can see here, they have something called an energy cost pass-through. That energy cost pass-through was down 14%, which drove the entire decrease in revenues. So let's take a look at what those are. What are pass-through revenues, and should we be concerned about those? Their 10K says electricity is the largest cost component in the production of atmospheric gases. We mitigate energy, natural gas, and hydrocarbon price fluctuations contractually through pricing formulas, surcharges, and cost pass-through and tolling arrangements. So what does all of that mean? That means that there is a cost involved in creating gases for production. These costs can be variable. So they can go up and they can come down. And so the arrangement that they make, Air Products makes with their customer, is to say, we will produce gas for you, and here's how much we're going to charge you to do that. But you're going to take the risk of energy costs. So when the energy cost comes in, if it's really high, you're going to pay a high energy cost. If it's really low, you're going to pay a low energy cost. The energy company will bill Air Products, and Air Products will bill their customer, but there is no margin on that. It is basically what's called a pass-through. I tend to look at Air Products without these pass-through revenues. That is a risk mitigation activity for them. So here are my final thoughts on these things that were worrying investors about Air Products and chemicals. Number one, the overruns in capital expenditures. That was a strategic decision to obtain first mover advantage. That's strategic. I'm fine with it. Number two, volume weakness, especially in China and the electronics sector. And from my perspective, industrials are approaching a down cycle. The question is, do I wait for that cycle to come back and invest in that up cycle, or do I try to catch it when it's down? So then the third thing is revenues are down 11% versus the last fourth quarter. So what I would say about that is that the declines in revenue came from these pass-through revenues. Pass-through revenues are down because the economy's down and volumes are down. So let's take a look at what some others are thinking about Air Products and chemicals. This is from Morningstar. They say Air Products is poised for rapid growth. They move on to say that they think the firm's ambitious capital allocation plan will fuel tremendous growth for many years to come, and that they believe that they are driven by investments in these traditional gas projects, but also new opportunities, including green hydrogen and carbon capture. Let's take a look at one more thing. I think this will be exciting for you. When you look at recent insider trading on November 7th, after the earnings release, Seifi Ghasemi, the chairman, president, and CEO of Air Products, bought $2.5 million worth of stock. So I think that's a good sign that he believes that the stock is undervalued and he's putting his money where his mouth is. So I am comfortable investing some additional money in Air Products and chemicals. Hey, I just want to share one other thing. Those of you who follow me on Instagram know that I tend to put some posts out there related to stocks that I'm looking at that are intriguing to me. I put out a post this past week, and you can see it here on Air Products and chemicals. You can see that this post went out when Air Products was about $255. And what I said was, I could be wrong, but this looks oversold to me. I picked up a few more shares. So if you are interested in hearing more real time what I'm doing in my portfolio, consider following me on Instagram, because that's where I will put that kind of information. Obviously, doing a video every Saturday doesn't give me the ability to kind of give you more real time, but the Instagram account is where I will post things like this. If you're interested in hearing some of these things real time as I'm looking at the market, as I'm trying to decide what to do in my portfolio, consider following me on Instagram. I'd love to have you there. So I just wanted you to know that was available. I've got a link in the comments below. You can follow that over and just follow me on Instagram. So it's great to see you guys. I hope you had a great week in the market. Next week should be kind of interesting as well, and we'll keep an eye on that. I do plan to have a live stream video on Monday night, but that does it for this video. I look forward to seeing you on Monday night.